Hey guys, all in crypto here, and welcome back, ladies and gentlemen, for your Sunday morning, evening, or afternoon, whenever you're watching this cryptocurrency market update. We're going to be doing a few things, also looking at Bitcoin. Maybe really kick things off with looking at Bitcoin and talk about. We've been speaking for quite a few months now, really before this rally occurred back in June, which was the start of the rally, around about the 18th, 13th of June. Markets across the board have been rallying. We've been speaking about this being a relief rally, and we've been speaking about when the realization of the situation that we are in takes place. Are we going to be going into that with the start of the new week? With Monday, we have the US stock market futures opening. If we see downside in those markets, that's going to echo over to the cryptocurrency space, as Bitcoin is really just trading like the Nasdaq and S&P. It's very frustrating at times for me when I have perfect setups, or no setup is perfect, by the way, guys, but when I have high conviction trade setups flash up, and then the US stock market will open and just throw that out the window, even if Bitcoin looks weak, just given the correlation. And the worry that I have, and we'll speak about it. We're going to bring up the Nasdaq and the S&P, things that I've been speaking about very frequently. You guys will know that we did say here, you're likely to get a bounce because you're on your 200-day or week, moving average, and that's caught a bid whenever you've come down to it. The problem that we've got is now, I think, the realization of a recession, 2008 or 2000 style period, is in front of us, and we've been short. We've been shorting this the whole way down, and we're short currently. And we'll talk about all that. I really just want to kick things off with this. This is the German saving ratio. Now, some of you may think, okay, well, I'm in the UK, the US, I'm somewhere in Asia, I'm in Australia. Why does this matter? Why am I showing you the German savings ratio? And I'm showing you this because this is really reflective of the environment that we're in. Inflation is a very negative pressure on retail because they have less money to go around, given the fact that we have such inflated prices, mainly in the energy sector. In the UK, by the way, as of October, most energy bills are likely to rise 80%. There was a study, and I played the video on this channel, of ITV, which isn't the most trusted news source, I will say that, and they are mainstream media. However, they did a survey and they were saying, look, roughly 10 million people in the UK aren't going to be able to afford their energy bills, let alone everything else. This is not an environment where people should be calling bottoms. People should be bullish. I don't think that that is the case. And you can see what we're showing here with this graph is we had March 2020, which for all accounts was a catastrophic event, this big dip here, when obviously we know what the story and headlines were there. Also 6 months after we had the yield curve inversion with a repo market. And then we had the government print a load of money. And what that essentially did, and what that looked like, not just Germany is kind of our example that we're broadly applying to everywhere else, was boost everybody's savings rate. The government were giving out money. I spoke to car dealers that were literally ringing people that I know up that have very nice sports cars and saying, look, would you sell it to us? Because they're flying out the shop at this point. We're getting people that have got this stimulus package that are just throwing it onto new cars and stuff like that. And that was kind of echoed broadly across the board. And you can see that in this German saving ratio. Look at what's happened since, and this is going to get worse. There's a wealth destruction taking place via inflation in regards to retail and via interest rate hikes in regards to global finance. Both of those pressures are exceptionally negative to a market, and all markets are driven from money that is based on liquidity. When liquidity is taken out, and we've done all this with you guys time and time again, and we're going to continue to do it, just because we want to make sure that everybody knows what's going on. We're not here to blow smoke. What we're here to do is essentially say, look, nobody's more bullish on crypto than me, but we have issues with a market, with the markets, not the cryptocurrency market as such, but the cryptocurrency market as an asset class, as a market that's moved from money. And we have issues with that given the environment that we're in, given the fact that we see consumers getting killed. This is brilliant, by the way, and a real good representation. I hope you guys are seeing what I'm trying to say here. This is a real good representation of sort of retail destruction. That's not positive for crypto. There's a heavy involvement in the crypto space from retail. Yes, there's institutions, and we've seen that, you know, really continue to shine through and become very apparent. And there's going to continue to be institutions moving forward. This is the new asset class, guys, but we have teething problems to get through before we make it to the promised land. And that's really my message. You guys know that we're not buying anything yet. We're largely cash. We do have altcoins and watch lists via my Patreon. And we will give some, of course, on the channel. And we've got 100x altcoins that I'll be accumulating a lot. You know, a portfolio of basically very small altcoins that I've done my due diligence on that we give out there. But ultimately, you know, this is the environment that we're in, and this is a very good representation of it, certainly from a retail standpoint. But this echoes through to a company standpoint. You know, if you think about running a restaurant or whatever it may be, all your bills have gone up, so your margins and then your supplies have gone up, and this cost then gets put back onto the consumer. Okay, now your credit line is getting more expensive because maybe you took a mortgage out on the building that you own. You might not be able to pay that. Forget retail properties. You know, it's just a really bad environment, and not an environment. It's why we've been bewildered with the sort of crypto commentary, just having pure blinkers on and looking at the crypto space, and it's exciting. This is a tech revolution that's going to change the world, guys. It already is doing that. But it takes time to do that. And this is one of those periods, looking at markets broadly and generally, recessionary environment, that you do not want to be investing until you have a reason to do so. Ask yourself right now, does the reward of buying here outweigh the risk? Maybe it does in the next 5-year period, but for me, I would rather stack the sort of probabilities in my favor. So we'll talk about a few things. You know, this was the structure that we were really looking at. This was 10 days ago now, or sorry, 6 days ago, when we were looking at the fact that you had kind of fallen out. We did call this as a break, and we actually shorted a number of altcoins here and are still in those shorts now. But this was your broadening sort of wedge-like structure. You came and you sort of, the issue with what happened here was there wasn't the follow-through that you'd expect. Typically with these structures, and I'm not sure if I have examples, yeah, you can see typically when you meet this lower trend line, you get a very positive reaction in terms of buying pressure. That was not present here, and that's what we were kind of trying to highlight, that people think TA doesn't work, and yes, TA can't accurately predict the future, but what it can do is give you a better understanding of what the future may look like, because all you're looking at here is price action, and really that just follows through to what people are doing, whether people are buying or selling. This told you everything you needed to know about the buy pressure that was here and that the market looked weak. Markets can fall under their own weight, and that's what I think is happening with the crypto space. And you're at a very, very key level right now, which you'd expect, forgive me guys, my mouse is all over the place, some sort of a reaction off of. Let's actually change this, make this a bit more broad. You know, you can see this level that you're actually at. It's no surprise that you bounced here. But what's happening again at this bounce? You're not seeing price action validate this as support yet. Yes, you've seen the validation in the respect that you've bounced off it, but what is that bounce? What is the bounce that we're currently getting here telling you? Doesn't mean that a bounce can't come, and you kind of expect it being at this key level. But what is this telling you? What are these candles telling you? And dropping it down, you know, what are you looking at here? You're not really finding this as, this isn't what I'd like to see. I'd like to see some sort of a bounce like this off this level. Can you see? And then you can go, okay, well, we can get long. We can take the day trade to the long side. Here, you're looking at a cliff edge, basically. And I do believe you will spill. It wouldn't be uncommon to come back up, retest this trend line that you broke, and then see that spill. But given this, it very much mirrors, and I'll take the volume profile out because we're not really talking about that. Very much mirrors this setup here. Big wicks, you can see there are buyers here and there are bidders here. But the problem you've got is, do you then get that roll? And I think in this kind of an environment, a roll is very, very likely, because we've got, again, the US stock market futures opening Later on today, we've got the dollar, which will start rolling again. Or what I mean is, I should say rocking and rolling, not rolling. And then, essentially, we call in a number of things. And then essentially, if we have, and if you look at how the Nasdaq finished, if we have a continuation of this, that's going to be very negative and weigh on the cryptocurrency market shoulders. And the problem that we've got is there's still a lot of unwinding of leverage moving forwards that can cause that further cascade. One thing I keep seeing from people is, oh, well, it's 87% down, but you can still go another 80% down from where you are. I'm not saying that Bitcoin and crypto is going to do that, but I'm just saying that there's going to be catalysts that unfold the lower the price goes, whether that be through miners becoming unprofitable and having to be forced sellers, whether that be through somebody's credit line getting hit, whatever that may be on the horizon. And this is what we have to kind of understand. And people are going, okay, well, historically, it can only get this bad. But they're missing the key point that we talk about daily on this channel is that historically, Bitcoin has never had to enter this kind of an environment. I'm going to show you it again, guys, because it's so important to cross-market. I mean, just even from a day trading point of view, I know some of you want to just be traders. Traders, and I am a trader, and it's becoming more and more of a full-time occupation for me. There is something, I think, maybe like emotionally wrong with traders in the sense that they actually want to be traders. Trading sucks around about 50% of the time. It's the times you do get it right that are great, but it's a massively emotional. And on top of that, I've got to say this, for all the hardship, it's well worth it. Because it's almost like one of the best self-help, getting to know yourself and understand, yourself, things you can do. Because you really do get to know yourself as a trader. You get to know your emotions. Anyway, enough of the philosophical nonsense. We were looking about the fact that you're running back into this head and shoulders that we had. This wasn't me. I had no analysis on the Nasdaq. This was from the crypto sniper, Francis Hunt, who had pointed this out. Very textbook. You broke this neckline. You've come back. You've retested it. Now do we roll and see that continuation? And the real risk is, are we now in this 2008 environment? We actually said, before you'd even had a bouncer, expect some sort of a bouncer or reaction, because you've held it beautifully since 2008. But you've got to understand that since 2008, markets have just gone up. Why have they gone up? Let's bring up our M1 supply. Bring it in here. I don't see any other YouTubers doing this sort of stuff for you guys. Okay, yeah, it wasn't a March 2020, but it was going up. So your money supply was supporting things. The Fed had your back. Now look at what it's doing. Well, look at the other times. It's kind of gone down. Not the best representation of the money supply. There are better metrics to show this. But when you see this teetering off, you're in trouble. And then it's only when the money printer sort of turns on again, even down here, you can see money printer turned on. A couple months later, it found its bottom. The real... sorry, guys. Thing that I'm trying to stress here is, if we go into this kind of an environment, even though crypto's 80% down, what do you think it's going to do? I would argue it's going to follow suit. I would argue it's going to get smashed. I would argue that, there's going to be a lot more pain ahead, and this is just the Nasdaq. And another important thing to remember is you always bouncer. Always. Before you go into this recession. And we are in a recession, Jerome Powell, or if not already, whatever they want to say, I think we are in a recession, and I think it's going to get broadly worse. And even Jerome Powell said that. He goes, there's pain ahead. We're going to continue to march on the path that we're on. We showed you in yesterday's video. That is going to crush markets. That's going to crush and cause pain across the board. Markets are going to, of course, feel the brunt of that as market participants get damaged and hurt. What you've got to understand, so I started with this really tells all. But yeah, that's really all I've got for you guys in this video. This was an interesting article. Bitcoin trading like big tech as market real. The S&P 500 and Nasdaq were trading at 2.3 and at 2.8% lower, respectively, at the time of publication. While Bitcoin was, so it's basically, we all know this. It's not new. What happens here, just as a quick roundup then, I guess. It's going to be interesting. I'm not 100% sure. You've got this key level here. I would expect maybe some sort of a bounce, but the problem that you've got is if that bounce ultimately gets cancelled if the futures market opens negatively, and then of course and I think the futures market will open negatively, by the way, guys. Also, what happened with Tesla's stock split? Has that already taken place? because there's usually a huge dump that takes place on that. That might be the 31st. I'm not 100% sure, but I'll keep you up to date on it, guys. Stay safe out there. You know, let me know what your thoughts on these videos are in the comment section. I know it's doom and gloom, but our time will come to start aggressively getting back into the cryptocurrency market. That time will come. Hopefully you guys are going to be with me for that journey. If you want to find out more about what we're going to be doing and preparing and what we're going to be buying, feel free to join my Patreon. It's a monthly subscription. And of course, you get regular meetings with me, any trading that I'm doing. Also, you get my 100x altcoin list and a number of other things. Well worth it, in my opinion, but it's whether you can afford it or not. Not everybody can, and that's totally understandable. All I've got for you in this video, guys, if you've enjoyed the content, like, it's always appreciated. So as a comment, and I look forward to seeing each and every one of you in the next YouTube video. Have a wonderful Sunday, guys. I'll catch you in the next one.